What if I told you that the most powerful institutions in the world aren't governments, aren't corporations, and aren't even controlled by voters? They're central banks. The Federal Reserve, the European Central Bank, the Bank of Japan. These institutions have the power to create money from nothing, manipulate interest rates, and decide the fate of entire economies. And most people have no idea how they actually work. This is the story of the debt machine, how it was built, how it operates, and why it might be the greatest transfer of wealth in human history. Let's start with the basics. What is a central bank? Most people think it's a government institution. It's not. The Federal Reserve, for example, is technically a private banking cartel owned by member banks. It was created in 1913 after a secret meeting on Jekyll Island, Georgia, where the most powerful bankers in America designed a system that would give them control over the money supply. Here's what central banks do. They control interest rates, they create currency, and they act as lender of last resort to commercial banks. But here's the key. They can create money without anything backing it. No gold, no silver, just entries in a computer system. Before 1971, currencies were backed by gold. If you had a dollar, you could theoretically exchange it for gold. But President Nixon ended that. Since then, every major currency has been fiat, meaning it has value only because the government says so and people accept it. And who controls how much fiat currency exists? Central banks. Here's where it gets interesting. Central banks don't just print physical money, they create debt. When a government needs money, they issue bonds. These are basically IOUs promising to pay back the loan with interest. The central bank buys these bonds by creating new money digitally. This money didn't exist before. It's conjured into existence. Let's use the United States as an example. The government wants to spend $1 trillion on infrastructure. They don't have $1 trillion, so the Treasury issues bonds. The Federal Reserve purchases those bonds with newly created money. The government now has $1 trillion to spend, but that money is debt. It has to be paid back with interest. Here's the problem. Where does the money to pay the interest come from? The government has to issue more bonds, which creates more debt, which requires more interest payments, which requires more bonds. It's an infinite loop, a debt spiral that can never be paid off. The US. National debt is now over $35 trillion. Japan's debt is over 260% of their GDP. These aren't numbers that will ever be paid back. They can't be. The system is designed to create perpetual debt. Central banks have another weapon, interest rates. When the economy is overheating, meaning regular people are making money and prices are rising, central banks raise interest rates. This makes borrowing expensive. Businesses stop expanding. People stop buying houses. The economy slows down. When the economy is in recession, central banks lower interest rates. Borrowing becomes cheap. People take out loans. Businesses expand. The economy speeds up. On the surface, this sounds reasonable. But here's what's really happening. Central banks decide who wins and who loses. Low interest rates benefit borrowers, especially the wealthy, and large corporations who can borrow millions at near zero rates and invest it for higher returns. If you're a bank or a hedge fund, you can borrow at 1% and invest in assets that return 8%. Free money. But savers get destroyed. Your savings account that used to earn 5% now earns 0.1%. Your money loses value every year to inflation while the people borrowing money get richer. Central banks claim they're managing the economy, but what they're really doing is redistributing wealth from savers to borrowers, from the middle class to the financial elite. The 2008 financial crisis exposed how the system really works. Banks made reckless bets on subprime mortgages. They packaged toxic loans, sold them as safe investments, and when it all collapsed, they were bankrupt. In a normal system, bad businesses fail. But these banks were too big to fail. So, what happened? Central banks around the world created trillions of dollars out of thin air to bail them out. The Federal Reserve alone created over $4 trillion through quantitative easing, buying up bad assets from banks and giving them cash in return. The banks that caused the crisis were rescued. Their executives kept their jobs and their bonuses. Meanwhile, millions of regular people lost their homes, their jobs, and their savings. The message was clear. If you're connected to the central banking system, you cannot fail. Losses are socialized, meaning taxpayers absorb them, while profits are privatized. Then came 2020. When COVID hit, governments around the world shut down economies, businesses closed, millions lost their jobs, and central banks did what they always do. They printed money. The Federal Reserve created over $5 trillion in 18 months. The European Central Bank, the Bank of Japan, the Bank of England, all of them did the same. It was the largest money creation event in human history. Governments sent stimulus checks to citizens. They gave loans to businesses. They bought corporate bonds and mortgage-backed securities. Money flooded the system. But where did that money go? Some went to struggling families, but most of it went to asset owners. Stock markets hit record highs. Real estate prices exploded. The wealthy, who own most of the stocks in real estate, got exponentially richer. Meanwhile, inflation began to rise. The price of food, gas, rent, everything regular people need went up. Because when you create trillions of dollars, the value of each dollar decreases. The inflation you're feeling right now? That's the hidden tax from money printing. So who benefits from this system? It's not governments. They're trapped in perpetual debt. It's not savers. Their money loses value every year. It's not workers. Wages don't keep up with inflation. The beneficiaries are those closest to the money creation, the banks, the financial institutions, the asset owners. They borrow newly created money at low rates, invest it in appreciating assets, and profit while everyone else's purchasing power declines. This is sometimes called the Cantillon effect. It describes how new money doesn't spread evenly through the economy. The people who get it first benefit most. By the time it reaches regular workers, prices have already risen. Central banks don't serve the public, they serve the financial system. And the financial system is designed to concentrate wealth. The debt machine is the most powerful wealth transfer system ever created. It operates in plain sight, but most people don't understand it. They see inflation, rising costs, and stagnant wages, but they don't see the mechanism behind it. Central banks have the power to create unlimited money, control interest rates, decide which institutions survive, and determine the value of your savings, and they answer to no one. The Federal Reserve Chair isn't elected. You can't vote out the European Central Bank. Some say this system is necessary for modern economies. Others say it's the greatest scam in history. But one thing is certain. As long as central banks can create unlimited debt, they will rule the world. The question isn't whether the debt machine exists. The question is, what happens when the machine finally breaks?